What's up, beautiful people? It is May 16th, 2023. What a trading year it has been. Hugely informative, lots of growth. I like the spot I'm in. And in this, talking a little bit about my game plan for the rest of the year, timeline goals, what I'm looking at. So, the first thing that I want to talk about is my trading model. And related beliefs. So, I have traded a lot of different systems in a year and a half, a little over a year. I've traded a lot of different setups, and I've explored and held a lot of different beliefs. Beliefs that you can make a lot of money trading the low time frame, that if you have an edge, you should trade it more, that it's easy to predict where price is going to go, different things. But in my experience of what has worked for me, what has not worked for me, when I've been profitable, when I've not been profitable, what I've found is, in the current setup I have, and the beliefs that have been shaped through experience, is that I don't have a predictive edge of where the market's going to go very much. I also don't have much of an edge of, I have even less of an edge of what path the market is going to take. Let me close this. Make that look a little bit better. Right. I have even less of an edge of what path the market is going to take. If it's going to chop a lot, if it's going to go straight to target. I don't really know, and I don't have to. So here's a belief. I don't have to know where price is going. I can have an idea, I can guess, I can predict, but ultimately that's not an important part of my trading. Let's get that backlight out. Okay, that looks better. Something like that. Okay. It's not hugely important. So, here's my belief. I trade, and this is what I do. I trade stop losses. I trade counter stop losses. I know that if people are forced to sell, and I can buy right there, if people are forced to buy, I can sell right there. Over a large enough sample, I'm going to be extremely profitable just taking the other side of the trade. It's a transactional edge. I don't know the chart. I don't know the price. I don't know where price is going. I know if you're giving me a deal, it's like someone has something valuable, a rare collectible card, and they fall on hard times, getting divorced, have to take care of their mother, whatever it is. They bring it in and say, I don't want to sell this, but I need to sell it. That's where you want to be on the other side of that trade. So you have to sell this, okay? You need to sell this, right? Trading, it's more exaggerated because people are really forced out of their positions right then. Pushes price to a short-term premium, pushes price to a short-term discount. And I'm really a short-term trader. I'm swing trading. I might intend to hold a trade for 3, 4, 5, 6, 7 days. Typically not longer than that. And to me, that's short-term trading. So I use charts, but when I'm looking at a chart, what I'm looking for is Where's the most stop losses? It needs to be when the stop losses end. So something that can go wrong with this strategy, because I need to use a stop loss myself for risk management. People use stop losses for a reason, but what I'm going to avoid doing as much as possible is thinking I know where the market's going next and market entering so I can participate in that move. I don't know where the market's going. All these people who do, they market enter because they think the market's about to move, and then the market goes sideways and they sit in that trade for 1, 2, 3 days, and all this liquidity builds up and it starts to move against them. Now they're trapped, right? I want to avoid that as much as possible. I want to enter on a wick or get stopped out right away, right? I don't want to get stopped out right away, ideally. So when price is forced to a premium or forced to a discount because of a lot of selling, ideally I want to enter at the edge of that and have my stop outside of these stop losses. I want to enter where people's stops are and have my my stop where people enter. I want other people to enter with me. Okay, so when I'm looking at a chart, I'm looking for stop losses. I'm not necessarily caring, I may take other things into account. I know people look at fibs. I know people look at EMAs. I know people look at MACD RSI. I know people look at a lot of different things. I care about where stop losses are so I can enter. I mean, that's my edge. Those other things are not my edge. It's hard to know where price is going to go, but it's possible to know. If a lot of people get stopped out, you get a good deal, right? If you're on the other side of that, that's where you want to exit. The price, everybody's forced to buy. I'm going to sell what I've been holding. Like, now's my opportunity, right? Or everybody's forced to buy. I'm gonna open a position selling. I don't know where I'm gonna buy yet. I have an idea. It might change. I have a target. Like, I open with I have an entrance. I have a stop loss, and I have a target. It doesn't mean I'm predicting the price is gonna move there. It means that I'm saying there's forced selling here and there's forced buying here. Or there's forced buying here, there's forced selling here. So I'm just going to draw a line between the two. Some amount of time it's going to happen, and it's going to happen enough that I'm going to be profitable. I don't know the probability of it even. I don't know the odds of it even, but I know that over enough sample, because it's high risk reward, I'm going to get paid. So when I'm looking at a chart, I'm looking at where the stop loss is. And I have a couple tools for that. One of them is HY block, liquidity, where it gives estimated. Here's where all the stop losses are. They're right here. Although HY block doesn't tell you where the stop losses are, it tells you where liquidations are, which is a little bit different but similar. So it tells you people are going to get liquidated right here. People are going to get liquidated right here. When people get liquidated here, it's going to force the market to a short-term premium and probably reverse. People get liquidated here, it's going to force the market to a short-term low and probably reverse. And here's something I love about it is a lot of the time people get liquidated and price keeps going. But if you enter at the liquidations, there's a reaction that lets you get your stop to break even. And then you get a lot of break evens. So this is something that I experienced last year when I was trading in this method. I had a lot of break evens and it was frustrating to have break evens. But the thing about break evens is that it's not a loss. So it can be mad about a break even, but not a loss. So my trading plan right now, my trading system, once a day, however long it is, I look at the chart and I see, okay, HY block liquidity. I also look at daily highs and lows. Where has price a gap beyond daily highs and lows that price has not gone into, and there are 1, 2, 3, 4 daily highs or lows that stop just short of that. People are going to put their stops there because it's past resistance, it's past support. And what price tends to do is sweep all those highs, all those lows at the same time, have a burst based on those stops executing, and then reverse the other direction. So I'm looking at the chart and I'm looking at, okay, here's an area where there's a lot of stops and then also enough of a gap beyond that price might reverse. And I'm gonna advance my stop with this setup. Right. Here's an area where, so I'm playing those liquidations. That's what it's all about. That's my system. I don't know where price is going. I don't have a predictive edge. I just deal with forced buyers and forced sellers. And the way I deal with forced buyers and forced sellers is with limit orders. I try to avoid market orders as much as possible. Market orders, again, they try to induce you into market orders. You think you know where price is going, and then it either goes the other direction or just sits there for days. And then more and more people enter, and your stop loss is mixed in with everybody else's. So I'm trying to have price just rush to my entry. Like I want it to be moving fast into my entry, right? And if I get stopped immediately, I get stopped immediately. It's something that happens. But that is what I do. I trade stop losses, and I don't really do anything else. So when I was doing this last year, and I was doing it profitably, during these months, I would take 15 trades in a month. But the thing is, those 15 trades, I was trading both Bitcoin and ETH separately at the same time. So really, it's like 8 entries a month. So really, it's like 1 to 2 trades a week, maybe 2 trades a week, realistically. This is what a lot of my data gave me. I get 2 trades a week. I might win half of them, but I'm going to have a 5 RR. So 2 trades a week, 5 out of 7 days, nothing is going to happen. It's going to be boring, right? I have to get my kicks out surfing. I have to get my kicks out basketball. I have to get my kicks out through my social life, going out talking to people. I got to get my kicks out through physical activity, walking the dog, whatever it is. It's not going to be through trading because I don't have an edge every day. And the thing is, like, if I'm trading a massive liquidations, that obviously can't happen every day. It has to be a somewhat rare occurrence. How often can it happen? How often can it even happen? Well, say I'd like a week's worth of stops built up, right? Okay. I would like 7 days of trader stops cleared. It doesn't mean 7 highs or lows, but that would mean a stop hunt happens to the lows once a week and to the highs once a week. Twice a week, right? 2, 4, 6, 8. So I'm paying attention to weekly chart, I'm paying attention to the monthly chart, I'm paying attention to the daily chart. The hourly helps me refine my entries. I find no reason to go lower than the hourly, and a lot of it is because I don't know how people trade a lower time frame, especially on crypto, because the charts look different. So if I'm trying to be precise, say I'm trying to enter a fair value gap on the 5 minute, the Bybit chart, the Coinbase chart, the KuCoin chart, the Binance chart, the 5 minute gaps are not in the same places necessarily. So it's, you think you know one thing, but you don't, right? The wicks aren't the same, the gaps aren't the same. But if you go to a daily, it's pretty much the same. You go to an hourly, it's pretty much the same, right? So this is what I'm doing. I have to be patient, but trust that it's going to work. Because think about it. Say I have, let's be conservative, 40% win rate, and let's even say 3 RR and 8 trades a month. Okay, so I'm going to win 3 wins, 5 losses. We have 9 minus 5 equals 4R. That's my month. And 4R times 12, that's 50% growth a year. That's conservative. Because I've had months that have been, I had one actually that was 25% and 4R. and 15 trades. So what is that? I won 5. No, I won 1 out of 4. I think it was 20 trades. I think I had 5 wins. I had 15 losses. But I had, it was 20 minus 15. It was 5. Something like that. So that's some variants of the math that can work in my favor. But, I mean, there's times it would be 50% with a 4RR on 10 trades. And I'm going to get 5 wins. 5 times 4 is 20. Minus 5 equals 15. Right. Now, I'm trying to avoid this. It's been more prevalent this year, but it doesn't happen that often. And that's trading into other people's stops. This is what breakout trading essentially is trading into other people's stops. I would prefer to have gotten in on people's stops and then holding through people's stops. But maybe you're either not in the trade, or you got shaken out, or you want to add. I don't really love it because price has a way of going and tapping the breakout level and reversing, and you just get the worst possible fill ever. So I don't really love, especially in the lower time frame. On a higher time frame, the daily is the only possible way to do breakouts consistently with Bitcoin, in my opinion. There is also scenarios where major stops have been triggered and have just ended, and price has already started to reverse. We're getting in late. It's not great, but yeah, I mean, ideally it's you get on the wick or you don't get in. So that's really what I want to focus on. So that's the setup. Now the next thing I want to talk about is capital management and kind of stress. Making trading simple. So capital management. Which for me, it's now all about prop firms. And also I've kind of slowed down. Like, while I've had winning months, right? During this year though, when I'm having losing months, it's always like next month's gonna be profitable. I'm gonna make money next month. I'm gonna make money next month. I don't know if I'm gonna make money this month. I don't care. I might not lose money this month, but I'll kind of change that. Like, I'm not trying to make money this month. My goal is by the end of the year, 2023, 7-figure prop funding. That means pass 5+ 200K challenges. Okay, this is my goal in terms of capital by the end of the year. Now, the prop funds, I just love them. I haven't got a payout yet, but it takes so much of the stress out of taking individual trades and places that on the sample of trades, which is how trading should be anyways. So the way a prop fund, you pay an entry fee, you might get money back later, but that money's basically gone, okay? You get a 200K account. You know this is demo. I know this is demo money. I know it's not real money. And I know if I lose money, it's not real money being lost. If I win money, it's not real money being lost. If I grow the account by such and such, then I move on to the next challenge. And if I lose such and such, I lose a series of trades, then that 1K that I invested is gone. So, I mean, it may come down to, on the final trade, the final week, this last trade is for real money. because if I don't win, I'm going to blow up or lose or whatever. But that's the end of a series of trades. The first trade, I'm trading 2% risk typically, 1.5 to 2%. The first trade is not for real money. The second trade is not for real money. The third trade is not for real money. The fourth trade is not for real money. The fifth trade is probably not for real money either, because if I've lost this money, I'm not risking 2% anymore. If I've lost 5 straight trades, the sixth trade might be for real money. But none of these trades are for real money. And what I've found is I can trade 5 challenges at the same time, and I can have 2% risk on all of them. And this for me is reasonable risk management, where I could blow up all of them and I can take another round of them. And I could do that 30 times. So like I'm not too concerned. And how long does it take to blow up a challenge? I haven't been able to blow up a challenge in less than 30 days. It's hard to do even with over trading. I mean, it's hard to pass, and it can even be hard to be in profit. It's hard to blow up though. Now, what I'm saying is I've been trading 5 challenges at the same time, 2% risk on each. With a 200K account, that's $4, $8, $12, $16, $20,000 at risk. Does it feel like $20,000? No. Because is it $20,000? No, it's demo money. So, part of my goal to have all these accounts and pass all these challenges, and part of my plan personally, other people have different ways they want to do this. I'm planning on continually losing some accounts and adding more accounts, but I have an edge and I can add accounts faster than I can lose them. I can grow my capital. But I can get to a point by the end of the year where I have not 1 million, but 1.4 or something like that. And I'm risking 4, 8, 12, 16, 20, 24, 28. I'm risking $30,000 on a trade. Not my money. I don't lose any money. I do not lose any money. It's not particularly stressful. If I win a 3R, 4R, I could have $100,000 on a single trade. That's possible. And then the year's a win on one trade. I grind all year. I lose all these trades. I build up these prop accounts, and I make it all back on one trade. And it doesn't need to be a home run, and it doesn't need to be crazy risk management. And I realize there's a lot of steps in between now and then. And I'm not going to go from 0 funded accounts to 7. I'm going to go from 0 to 1 to 2 to 3, back to 2, back to 3, back to 4. And I don't know that I'm going to risk 2% per. I may risk 1% until I have a buffer, and then risk 2%. I might also have 7 accounts. I pick 4 of them. I risk 2% on each of them, and I do not trade the other 3, just to have some backup. And then say I get that 100K payout. Am I going to go trade with that? No, I'm not going to trade with that, because I have these funded accounts I can trade with. So the plan is to not even trade with my own money. I can take that money, I can earn interest on it, on savings or credit deposits, CDs. I could just have it in cash to know I'm good, right? So this is my plan, and it's doable. So say I'm trading these liquidations and I get 8 trades a month. So if I'm getting 8 trades a month, how much does it make sense to risk? It doesn't make sense to risk 1%, because I could lose all 8 trades and I wouldn't blow up, but I would run out of time. So it does make sense to risk 2% or so. 1.5 even probably doesn't make sense. Probably 2 or even 2.5% probably makes sense for what I should risk on these challenges. Maybe it can be a little bit more conservative on the phase 2s, because I have 60 days and lower targets and so on. But phase 1's 2 to 2.5% my initial risk, and then scale it down to maybe 1.5% if I'm losing. But if I'm only taking 8 trades a month, it makes sense. But if a loss is 1R and a win is 4 or 5R, and I'm risking 2% to 2.5%, and this has been my experience so far, it's possible to pass these challenges in just one trade. That doesn't mean it's the first day. I might lose the first trade, and then I have to wait. And then I get a winner. And then I also have found myself in these interesting situations where I only need a very small winner to win. So I could risk small and do a regular trade, or I could have a really near take profit, or I could have a really wide stop, or some combination of these things. So it's interesting, and it definitely gamifies the experience as well, where, um, yeah, it's quite interesting. But yeah, this is the game plan. It's May, so I have June, July, August, September, October, and 1, 2, 3, 4, 5. Um, I'm not. I'm relieving myself of pressure of making money this month or even this year. I would like to have a winning year, but I believe I can do it in the final 3 months of the year if I focus these next 3 to 4 months of the year on just simply passing prop firms and waiting for liquidity events, waiting for liquidations, and yeah, see how that goes. So that's the game plan, and I'm confident it will work. I'm confident in my ability, everything I've been through to make it work. So I'm excited and I'm ready to get it and get after it. So yeah, prop funds and trading stops. That's the game plan. All right, let's get it. Much love. Peace.